All right, hey there, everybody. It is just after 11. Now you can hear me. Man, oh man, I apologize for that. I'm just talking here, and my connection for the microphone didn't seem to be working too well. I apologize. So we'll try it one more time. Welcome. I'm Christopher Inks with Texas West Capital, and I'm coming at you guys live from Bernie, Texas, here just north of San Antonio on Friday, April 8th, 2022. And if you want to join us, as I was trying to say here, just click on this little button, texaswestcapital.com. Click on that button right there. It'll take you to our other site, howtotradetowin.com, and you can get set up there. Tier 3 is where it's at. That's all the education, 3 live streams every week, all that fun stuff. We'd love to have you there. Gosh, man, sorry about that, guys. It seems I've been having this trouble here lately with this stupid connection for some reason. Probably have to buy a new one or something. But anyway, I was saying hello to everybody. So hello once again. Let me kind of catch up with you guys here. Let me see. You guys can hear me now, though, right? I'm kind of scrolling down here. You're telling me no sound, but I'm saying some profound things too. Like it says. Oh man, I do apologize, guys. It's just been one of those weeks, man. It seems like the days have all just kind of run together, and everything that could happen's kind of happened, and here we are now, right? Let me see here. So, hey there, everybody. Good to see you there. Pump BTC, I appreciate you checking in, man. And everybody else as well, as always. There we go. So let's try this. Let's see if we can get some real information here going, right? So as far as Bitcoin goes, guys, we've kind of been dissecting it as it's continued to, as the price actions continue to play out, right? And as I continue to say, as I've said so many times before, guys, listen, most of the time as a trader, you're not going to know exactly what's going on with Bitcoin. So what you need to understand are where the way you're looking at the chart, that whatever technique or strategy, whatever you're using, just make sure you understand how to find your validation and invalidation levels with that, okay? Now, I've got a lot of people worried it's going to continue, really low, and that it's just it's topped out now and everything. I don't believe that's the case at all. And so, right now, though, we need to see some things happen, right? And so this morning, we've got this great little rally off here. Now, here's the thing. Depending on how you count this here, I've got this as a W, an X, and a Y, right? So with this Y, we've got as an A, a B, and you just need to get 5 down, right? Now, there's 2 ways to count this coming down. One finishes it off right here at the swing low. The other says this is still wave 4, and we've got wave 5 still to go, okay? So what does that mean? Well, that means we're going to have to look for a little bit here. If this is wave 4, then we're printing a flat correction. So we had A, we have B, now we're getting C, right? C could be done here at the swing high, could potentially reach up here toward the 50% retracement at 44,432, or even get caught right here prior to it, but, could potentially go that high around that S1 pivot. Here's the thing. The other thought, again, is that it ends here, and that this is a 1 flat correction for a 2, and this is basically 3 heading up, okay? If that's the case, if this is 1 and then this is A, B, C basically as a 2, then that gives us, let's do this kind of this, go through here and get this here, right? That gives you, again, this wave 3 target right here where we have it, right around 44,653 minimum, okay? Now, in the grand scheme of things, breaking up into wave circle 1 up here at 45,600, breaking into that will invalidate the idea that we've still got a 5 to go. It'll suggest that the bottom's in and we're headed up. So that's the big thing I'm kind of watching at the moment because, 4 rallying into wave 1, overlapping into wave 1 is only, acceptable at leading in any diagonals. So what that means is, by default, most of the time when that happens, you should be thinking, okay, the bottom's in, we're heading the other way, or the top's in, we're heading the other way. So that's the kind of big thing we're looking at. Now, if wave 4 is still in progress and it continues higher here, generally we're going to look at it up through this 50% area. But as it starts pulling away further and further from that, it makes it more likely that the bottom's done. Now, the one thing that I think is, there's 2 things right now that I think may suggest that potentially the bottom may be done. Okay, the first is this nice big, huge rally here. This is the 1 hour, big, huge bullish engulfing candle here, rallies up. And as long as we can get continuation and a fall through with that, I think that's probably a pretty good, suggestion that the bottom may be in there over here, right? The other thing is this range. And if we pay attention to where the volume actually comes in this range, you're going to notice it's at the bottom. You don't have much volume coming in at the top. Now, as I continue to tell you guys, that's important because what we're trying to do with our volume and price action analysis is figure out where are the big boys going. Because the one thing that most traders do, and they shouldn't want to do, but they do anyway, is that they're fighting against the big traders. So the thing that the big traders can't hide are their footprints in volume, okay? If you have a lot to buy or sell, it's going to show up in the volume. So what does that mean? That means if you have a range and you have much more significant volume coming at the lows in that range than you do at the highs, then what that's telling you is your bigger players are out there buying up. They're loading up because it's coming in at the lows, right? If you have much more volume at the tops of the range, like that, that's going to suggest that they're selling into you as retail, right? So if we look at this, and let's go ahead and zoom it into the 15 minute to get an even better look at it. So if we look at this, you can see that at the beginning of the range, you expect there to be a bit more volume at the beginning, at the tops and bottoms, because it's just starting out. You have that volume, that back and forth, right? That buying versus selling. But even within that, look at this. So you get up to the highs of your range up here, your volume is down here. You dip down here, though, look at how your volume picks up. It goes up. Again, your volume's lower. Comes down. Look what happens again. Spike of volume coming in. We continue to do this. You get up here again. Little bit of volume kind of, well, you're picking up actually volume down here at the bottom. And you get up here to the top. Again, lack of volume. And you come on down here, and not only do you have volume coming in down here at the bottom, But you overall, your volume, you see how your average volume's kind of staying down here? And then you get toward this bottom on this dip here, and you notice how it all is a lot higher here, right? I think that possibly, kind of gives you some support for the idea that maybe that bottom may be in. But, so here's the thing. Again, we need to see follow through higher on that. And, if it is, based on what we're seeing here right now, let's zoom into the 5-minute kind of here and check a little bit. So what I was talking about with Discord this morning is that we had a clear 1, 2, 3, 4, 5. Looks like a pretty clear 5 here, right? The other possibility is maybe this is a 1, 2, and then 1, 2 here. So you have 1, 2, 3, 4, 5. You get a 1, 2, 3, 4, 5 here. And then you have A, B, 1, 2, 3, 4, and that would be 5 as an ending diagonal here. So what we could see, I think, here is maybe instead of this lower one, maybe this one is 1 here. And that would make sense because your first subwave coming out of that swing low there should find resistance where your previous area of resistance was. So we get that, and we end up getting this this pullback in volume here of almost 38.2. But again, it is a flat correction. It's ABC down, ABC up, reaches over 90% of wave A, and then 1, 2, 3, 4, 5 is an ending diagonal. So I think that may be what goes on there. And if so, well, now this gives us a 1 and a 2. That gives us a minimum expected wave 3 up here at 45,533.5. Minimum wave 5 up here at 46,000. So 46,000 puts us into wave 1 here. Or into wave 2, into wave 1. In that area there. Which, again, as I mentioned earlier, suggests that the bottom's potentially in there. So, let me see here. 1, 2, 3, 4, 5. Yeah. So what you're looking for initially here then is if this is wave 4, you're looking for a breakout above it. Okay? So that is 43,738.70. You're looking for a breakout above that. Now I'm going to put my money where my mouth is. I'm going to put my money where my mouth is. Yeah, we'll say that. And I'm going to go ahead. Let me see here. 15-minute is just kind of dipping out of overbought here, trying to curl back up. So could be longer coming in. Potentially a bullish engulfing setting up here, but you got another 10 minutes still left on this candle. Whoops, wrong one. We'll talk about that chart in a minute. Again, 1 hour, kind of push on a huge candle here. 4 hour, we're up and overbought, but again, could head up nice and high here, off these lows here. Your daily. So there's the daily. So we dropped below, ended this day a couple of days ago. At the end, we closed at the lows of the day, below the pivot. Yesterday we went sideways. Today we've got a higher low and we're at a higher high, and we're trying to break out above that. We've got the daily Stochk RSI trying to curl up and cross bullishly there. We do have this from right over here, from this point to this point, you've got higher lows. We've got lower lows here, so hidden bullish divergence. You could see that the volume spike here is clearly showing supply and control, right? Huge volume spike, almost all candle spread right there, right? If you look up here, when I mouse over it, you're going to see right here, it'll tell you how large that candle spread is. And so right there, it's almost $2,340. The next day here, you have just over half that volume, but it's completely flipped. So you had this significantly in control supply here. And then yesterday, demand ends up in control, even though a bit of, not quite a doji. It's got a bigger body than what you would get for a doji. But now we have this trying to push up here. So a lot of good things coming here suggesting maybe, just maybe, that may be the bottom there. And we get this done, right? And so what I'm going to do here now is I'm going to go ahead and go long right now. Let me see here. All right. Let me see here. Oh, what is this? Active orders. Why is it not taking? Give me a minute here. Let me see. Oh, I hit it on a limit. That's why. Let me get rid of that. Let me try this one more time. I wanted to go ahead and market buy in there, guys. We'll try one more time. Long right here. All right, I am long now from 43,670. Wait, 43,670 and a half. Now, my stop loss is going to be right here below this swing low because right now I'm looking at this as I told you, A, B, and then 1, 2, 3, 4, 5, C, flat correction, wave 1, wave 2. So if it drops down below this swing low right here at 43,550, I'm going to be out because that means that I am, it's not correct the way I'm looking at it, okay? So I am long right now from, again, 43,670.50, and we'll see. Now, if you want to wait, you can wait for confirmation on a breakout above this, but I'm talking to you guys. I don't have time to sit there and watch it. So, again, stop loss pretty close. But you really want to see a breakout above what would be wave 4 of C right here at 43,738.70. That's what you really want to get out. That's on Coinbase. Okay? So, look, I'm long now with the idea that maybe we might have a wave 3 in progress up here toward 45,533 and 50 cents or so. So that's what I'm looking for, okay? Worst case scenario drops down here. I'm just out a little bit. I've got a pretty, the stop loss is sitting right here below that swing low. Just again, in case I am wrong on this. So we'll see what happens. But, again, the proper way to trade this is to enter on the breakout above 1, 2, 3, 4, 5. So the breakout above wave 4. That would be the proper way to do it. Because again, that's your confirmation. That says, okay, well, your 5 waves down are done now. Okay? So that's where I'm going in. We'll see what happens here. There is nothing here yet that says we definitely have to be bottomed out. Again, you can see my count here, which has been suggesting that we've still got a 5th wave to go, and wave 4 may only be printing, some kind of what do you call it? Flat correction, A, B, and getting C up here. But again, the further, if we reach to 50 and we continue going, the further we get above that, the more likely that it is that the bottom's in over here, okay? Now, we've got some other things that are going. Ethereum was up 3 waves. So if Ethereum breaks out higher for a 5th wave, that's probably a good indication that Bitcoin is probably bottomed as well, because remember, these bigger ones tend to move together. XRP is rallying up toward the daily pivot, and so it looks like a pretty clean chart. The XRP and the Tezos charts, both to me, are the clearest counts right now. And so I was telling that to our Tier 3 and Tier 3 members, Tier 2 and Tier 3 members last night. Those are the clearest counts right now, and they're suggesting that potentially that wave 2 is complete. So, again, we'll see if Bitcoin does follow up with this here. But I explained to you how you should be trading it, and then I explained to you that I didn't do it that way because I've got you guys here. And I don't have time to sit there and kind of babysit it and look for that while I'm talking to you. Okay. Let me see here. BTC King, what's up? He says, the weekly MACD crossed up after a very long time. The structure looks great. Could we possibly at the very beginning of the 5th wave? No, I don't think so yet. I think we're still finishing the triangle. So let me kind of show you guys. This is that other chart. This is still the major chart we were looking at. It has my Wyckoff here in red, and then it has the count there in black, right? And again, with this, the idea that because of the depth of the pullback here, it suggests that wave A is probably complete, and this is wave B, which means we have wave C. And wave C is likely heading up here toward this 57,500 area, this higher volume node that maybe up about that far. Could go up a little bit further, could get a little bit lower, but around that area, I think. And then what we'll have is 3 waves back. So we're going to have 5 waves up to there, and then 3 waves back to finish wave E of 4. And then the triangle should be complete, and we should rally up in 5th wave. So that's what I think. Okay? Let me see here. Andrew, what's up? You said Bitcoin daily. Are we just finishing a much larger wave 2 here and working on a wave 3? You mean a wave 3 down? No, I don't think so at all. I think everything else suggests that this is all bullish. Again, we talked about it over here. We talked about it over here. We talked about the entire structure, volume, and price action. This appears to be accumulation here. And if this is accumulation, then we shouldn't have some big move down. Because if this was 1 and this was 2, wave 3 is going to have to really get down there, right? So I don't think so. Now, there are no guarantees in trading, of course. But I think in order for us to really kind of suggest that maybe this is a 1 and a 2, I think we'd have to have a much larger drop down here toward those low 30s at least to really start thinking, well, maybe it is. I think as long as we're anywhere near where we are, or the S1 pivot or whatever, I think it still screams, pullback and then higher up. Scott, what's up, man? Pivot points, they're just basically based on the previous areas of support and resistance. That's the easiest way to explain it. So when you see these pivots come up, they're because previously this kind of area was support or resistance, and things should always continue to work like that generally. Now, that means, it doesn't mean that price will always find support at support and always find resistance. But it means that once you overcome those levels, you should be looking for that next area of support or resistance. So yeah, that's what we would have right there. So that's what's going on with that. Oh, you meant it the other way, Andrew? Oh, were you looking at maybe like a 1-2 here? Okay, yeah. No, I think we're doing the triangle. I think we're probably, again, no guarantees, and it's possible, right? 1-2 and then, maybe 1-2 here or something. But I think especially in this area, I don't think it works so well as 5 up. So, I think it does still work better as a triangle overall here. So we'll continue playing with that. But, if it continues, especially if it rallies strongly above that 58,000 kind of area, I think that, at that point, maybe we can look at the possibility that, that it's not a triangle, that maybe wave 4 was over here like we'd looked at originally, and this is 1-2, and we're heading up. But until then, I think, in either case, whether triangle or that, it should be headed up right now, I believe. Is that Marlowe's? Hey, thanks. I appreciate you subscribing, man. Hopefully we'll give you the information you're looking for here. Let me see here. What's up, Diego? Always good to see you, buddy. Glad to see you back, man. Michael Ballett, what's up, man? I hope I didn't just screw up your name. Brian checking in here. Let me see here. Hangry Patrick. Still makes me laugh every time. It's the hangry. I think it's what it is, the hangry. Let me see here. So, So that's kind of what we're looking at here, guys. Now, let me tell you, if you've been following me, I've talked about confirmation from this right here, right? And so what is this? This is your Grayscale Bitcoin Trust, guys, right? And remember, we talked about how even though on spot, where it looks like we're doing a triangle here, on GBTC, it's an ABC down here, right? Or WXY. Or, again, maybe even a flat correction here with as high up as it went, ABC. But nonetheless, the volume and price action here suggests that this is accumulation. And so you're not going to have accumulation on GBTC, which, remember, with the Grayscale Bitcoin Trust, you're just buying shares in the trust, right? You're not actually buying Bitcoin. But it's based on the Bitcoin holdings it has, right? And then, of course, a little premium and all that. So you're not going to get this large year-long, year-plus. Remember, this is all the way back in January of last year. So year-plus consolidation as accumulation here and not have it here. So if you need a clearer picture, I think this is a much clearer picture here. And especially you get the spring on the drop. If you're looking at Wyckoff here, you're getting your buying climax, your local selling climax, your rally up. It comes down into a spring right here, which we know because it dips below the range support here, right back up into it. And look at that volume coming into those two candles. That's a spring right there. We came back. We had a test of that spring right here. Much lower volume. That's a successful test. Came up. Pulled back again, even lesser volume. Pulled up, came back again, even lesser volume. And this is what you want to see. If you think there's a low in the form of a spring or whatnot, then anytime you're pulling back after that, especially in that area there, you want to see it on lesser volume. That means there's less selling going on at the bottom, which gives it more likely that that was the final be all right there and we're headed up. if we look at this, you can also notice that you've got this ABC back here toward the pivot, right? So it's possible, I've just kind of jumped in here real quick. Maybe you got a 1, 2, and then 1, 2, 3, 4, and you've got a 5 here, which will give us 1, 2, 3, 4, 5. And I think if we get something like that, or 3 even going up higher there, I think the 3 will work as wave D with this, 2 different structures, right? But wave D with this and wave E on that pullback, this wave D to wave E is basically what I'm trying to say is going to be your 3, 4, 5, and your pullback here somehow. I've got it as a 1, 2, 1, 2, and then 1, 2, 3, 4, potentially 5 coming up here. Nonetheless, and that may need to be a little bit updated as price action plays out, but because there's a lot of that overlapping going on. But it says up, and Bitcoin seems to say up as well here. So the question is, are we bottomed out, or do we have to come down a little bit lower here on spot to finish it before it goes up? I think, either way, we do look for that. We will be looking for that higher up on that. All right. Jonathan, good to see you checking in, man. Wazobia dollars as well. What do I think about the bear flag on the daily that started in mid-January? Scott wants to know. The bear flag started in mid-January. Oh, you think this thing right here? Again, a lot of there's different counts that we can kind of get into this. And for those that have been following me, we've had a few different counts in here. What do I see positive about it? Is notice this pullback here from the resistance is coming right there to that channel EQ. So if we get a rally back off that, that suggests that this is just it sets up for a bigger move out, right? Because you have this consolidation where you get the slightly higher highs and higher lows as price potentially is kind of, nearing that point where it's going to break out and get some real movement to it. So, yeah. Does Grayscale have a case against the SEC for a spot ETF? I'm not sure what you mean here, Brian. What do you mean a case against them? Do you think that, are you trying to suggest that maybe Grayscale is suing the SEC for a spot ETF or something? Let me know what you mean there. What's going on, Mike Lamb? Good to see you. So anyway, so this is kind of what we're looking at here, guys. You can look at the high volume nodes here. You've got this one down at the S1. So even if we were to break down, I'm not really feeling bearish because you've got this huge high volume node down here at the S1 on the daily. So we just have to take a look at it and say, okay, maybe this is a larger wave B, and then we'll get it going. Once we clear this high volume node up here toward the recent swing high, we should be good to go up here toward this next one. So looking at it that way, there is that as well in that. Yeah, I don't know about... I haven't heard about Grayscale having a case against the SEC. But, again, the way the SEC works, the way the Constitution works is that it allows the government to create the agencies who then go into, they entrust the agencies to do the job. And so, trying to sue an agency is really more or less a lost cause, really. You're not really going to get anywhere with it if that's what you try. Yeah. Because of the way it's set up with, with the Constitution and everything. Yes, Elaine, I'm going to talk about the dollar. I sure will. What Jonathan says, what are your thoughts on the broader macro view? Seems like the Fed may go 50-point basis hike back to back. Yeah, again, same thing we talked about for a few months here. We discussed that possibility because, with what's going on with the, what's it called? The economy and unemployment being at that ridiculous level that we talked about. I think I talked about it last week, right? Let me see here. Or at least on Tuesday. Let me show you something here. All right. So this is from my Twitter account. If you guys aren't following me, you can do so at TX West Capital. Don't expect me to sit there and put in a lot of nonsense on there or to engage in a lot of chat. I don't really do that. I work real hard with what I do at TWC, but I usually put things here that I think are really important, right? Or in the case of this right here, I'll give you this link. You can get some free educational thing from Elliott Wave International right there. 3 trading strategies to help you find opportunities in the charts. So usually it's $99, I think the course is usually. That is what they charge. Right now, for however long, they're going to do it free. She said she didn't know how long yet, my contact there. But you can jump in that, sign up for a free account with them. You don't have to put your credit card in or anything. And then you can take advantage of that right there, as well as whatever free things they do throughout the year. So I always put stuff up there when they have it. If you guys don't know who Jeffrey Kennedy is, amazing technical analyst, really a great guy to learn a lot from. So I would definitely suggest anything that you can get from him to definitely follow. But I was talking about, again, I don't remember if I thought I did, but this right here, this is the unemployment rate since, here before 1948, right? And what do we notice? We notice that around this area, around this 3.5 area, is usually where things turn around, right? So in markets, if you haven't noticed it yet, people get very bearish at the extremes to the low end. They get very bullish at the extremes to the top end, right? That's where retail is often buying the top and selling the bottom, right? They get to the top and they think, oh, it can't ever stop going up. And they just buy, right? It gets sold into. At the bottom, oh, it's never going to stop going down. It's got to go down a lot lower, right? We've talked about it so many times over the years on the different areas of the charts where I've warned you that it's likely a bottom. And, crypto Twitter's been like, oh, yeah, no, we're going lower. Again, you have to get beyond what crypto Twitter says, which means you have to learn how to understand these things, right? But right here, 3.6 was last week when the non-farm payrolls was released. Unemployment dropped from 3.8 to 3.6. So again, getting us right to this area, which suggests that we are at an extreme for unemployment. The Fed considers this area generally to be fully employed. But as you notice, it doesn't stay down there. Once you get down this area, it goes back up, right? So, again, the idea is that unemployment's going to start rising here. And so with unemployment, what does that mean? Well, in the macro, the way that we look at it, it means less money being able to be spent out there, right? And if we're spending less money, then that means companies are making less money, right? And if companies are making less money, then that usually means they lay off people, right? Now you got more unemployment. And those people that get laid off can't pay their mortgages. So now their homes end up getting foreclosed on, right? So this is leading into a potential deflationary spiral that I've talked about over the last few years, right? Now, on top of that, we have the interest rate hikes, which you pointed out, right? And so as that interest rate rises higher, less and less people take out loans, right? And so we are a credit-based economy. That's what we do, right? We're debt-based. So we are in this credit cycle, which I believe is probably topped out. This is what I've been talking about. And so what does that mean? Well, that means that as credit shrinks, your economy shrinks as well. And so if you have less people able to take out loans, less people that can take out loans don't want to because they're concerned about the things that are going on in the economy, or it's getting too expensive to take out loans, right? Because the interest rates are rising. So it's less credit being extended. Now, not only that, but over the last few years, since the March of 2020, when we had that drop there with the pandemic, when it began, since then, the government was backstopping basically the corporations, right? Especially these zombie companies that should be out of business. And the only reason they're in there is because the government's backstopping them, basically buying their bonds and all that kind of stuff, right? And so then people were getting involved in them, buying them because, hey, we're going to keep going up because the government's got our back, right? Well, or the Fed. Well, the Fed doesn't have their back anymore, right? If you paid attention to the Fed minutes that were released earlier this week, basically Fed says yes, potentially 50 basis point hikes. Yeah. They talked about normalizing their books. So all the buying of treasuries and MBS that they did, the mortgage-backed securities, are now going to start being sold into the market. So now your companies are laden with debt. They took on a whole bunch of debt because it was easy money, easy credit the last 2 years, to do so. And with interest rates rising, it starts becoming more expensive for them to pay back their debt. Now, if they have to spend more money paying back their debt, then they have less money to expand. They have less money to produce. So we already looked at the other side of it where less of us spending money means less revenue for them. But on top of that, they have the bigger burden, the more expensive burden of debt they have to pay back now. And so that, again, is a double impact on employment. Going to start seeing people laid off. So that makes a lot of sense when you think about this potential bottoming here and unemployment starting to rise. Right? So I think that's kind of where we're going with all that. I think it makes a good case that the economy is topped out and has started rolling over. We're going to take a look here in just a bit at the indexes as we always do, and you'll see that they've continued to drop. And so adding more confidence to that idea. Now also within here, I posted some articles here because I've been talking about the housing market, right? Again, we're at the extremes in the housing market. You've got these huge rallies up over the last 2 years in prices, and all those things. And they're like, there's all these orders for new homes. And so prices are going to continue to rise. Well, it's kind of hard for prices to continue to rise when people are deciding they can't buy anymore or being told they can't buy because they lose their jobs, right? So we have the economist over there at Redfin talking about the housing market slowing down. They talk about showings, open houses, stuff like that, all dropping off compared to, over the last year, which is a sign that the top may be in on that, right? And then, of course, we've got the this article here from MSN, from Bloomberg, talking about the home prices suggest that the housing bubble is brewing in the U.S., the Dallas Fed says. Again, they're talking about it looking a lot like just prior to 2008. What happened in 2008? Great financial crisis, right? And they're saying that it's right now starting to look a lot like this, right? So this is the blue here, as it says here, is that Dallas Fed's exuberance indicator. The red exceeds the upper confidence bound there. So, great articles to read here, guys. If you want to, I would suggest you check them out there. And then we talk about here the opposite of the bullwhip effect here, talking about, this is from Craig Fuller, who's the founder and CEO of FreightWaves, American shipper and CEO of Fly Magazine. Anyway, this guy has spent his lifetime, 40 some odd years, in the transportation kind of sector, right? And so he does a great thread here where he starts looking at a lot of information, data points, suggesting that that we're probably topping out again in terms of retail and whatnot. Because so prior, we've talked about the fact that we had all this backlog, right? The supply chain hiccups, right? The supply chain bottlenecks. And we talked about a part of that was just the fact that we didn't have the trucks. Remember, we talked about how all those shipping containers were over in LA port and sitting right off the coast there, and how that was all building up, and it couldn't go anywhere because they didn't have the truckers to come in and take the stuff, right? And then we talked about how they were talking about instituting some kind of fines because you have to remove your trailers, right? And all those trailers were building up there and they were having no room. And all this had a lot to do with, COVID restrictions and stuff coming on, against truckers and all that kind of stuff. But he says now, if you read through that thread, that there is now, whereas the truckers were below what was needed, now they're above it. So now there's options. So now there are too much. And the idea is that what happens every time, and this is something I can actually agree with here, is that every time we get into this situation where there's some kind of supply chain bottleneck, usually what happens is that your companies then over-order. They get too much. And, they're always playing that catch-up. And so then when the freight, when the trucks catch up and whatnot, and they can get it back out to the economy, well, now there's not as much demand as what it was. So now they have to start, dropping the prices and whatnot because you can't hold it forever, right? You can't hold it. You want to be able to sell it for something, to get something from it. Lower prices, again, a sign that things are coming down. So you've got your hyperinflationistas out there. I like to use that word. who are screaming hyperinflation because Jack Dorsey said it, man. Dumbest thing. But anyway, and I don't mean that. Sorry, guys. I'm just a little frustrated with it because those people screaming that have no background in what I'm discussing here. And yet they speak with the confidence of somebody who does, right? And that's unfortunate because they're not willing to listen. But if you look at the two biggest drivers of that rising cost right now, which is real estate, the CPI number, which is real estate and oil. And we know that oil looks like it's basically topped out. We'll look at that chart here in a minute. And then we look at real estate probably topping out. Well, how do you get continued inflation if the two biggest contributors to it by a long shot are both coming back? You can't keep getting that. They think, oh, well, because 80% of the dollars were printed since, whatever it was, 2010 or whatever, that all of a sudden we have to go into hyperinflation, right? But there's a whole misunderstanding. Nobody's talking about the euro-dollar market. Nobody's talking about the fact that demand for dollars continues to increase. Now, if you're printing out all those dollars and nobody wants them, sure. But people want them. As a matter of fact, as I point out up here, let me see here. Right here, I said you're worried about inflation, but you should be worried about dollar liquidity. There's actually a dollar liquidity issue at the moment, and it's building. It's harder to get those dollars. And so if things are that way, and it's harder to get that dollar, guess what, folks? You're not going to get hyperinflation. You can't. Okay? And so then the other thing here was about the Fed minutes release here. The article talks about it, winding down of the sheets there. So quantitative tightening instead of easing. So QT instead of QE coming in. And of course, I mentioned here, remember that student loan moratorium that we've had going on for 2 years now? It was supposed to expire at the end of January, and then that got pushed to the beginning of March. And now beginning of May. And now they're extending it again at least till the end of August. They're saying, oh, well, we need to give people more time to get prepared for this. Well, I'm going to tell you what, man, if things are happening like they look like they're happening, people are going to be a worse off position at that time. So what are they going to do? Keep pushing it back? This is what I talked about, last year coming into this year, and they kept pushing that moratorium, was that they have to. You can't, if you worry about what people are going to be able to pay or not, well, situation's going to be a lot worse off, and things aren't going to help you out any there, right? And so, at some point, is the government going to say, okay, well, we just can't do this anymore? Or are they just going to keep on pushing it as everything continues to get worse? That's what's going to be interesting to me. That's what I'm going to be kind of really interested in seeing with that. All right? Oh, yeah, my stop loss got hit. It's fine. It was a short one. Like I said, just to try on that really short time frame. So we'll see what happens there. Diego, have a great day, man. Can I enlarge the charts? Which charts are you talking about? Are you talking about what we were looking at here? You can just go to my, this will just take you to the article. I did enlarge that one. Again, this will take you to the article. So if you go to TX West Capital on Twitter or Texas West Capital on Facebook, like that, you'll be able to actually get in there and look at it. But yeah, I can't actually just pull up those charts right there, just that one, because these are all links to the articles. So yeah. Beak Vape thinks that the moratorium is going to extend it one more time in the fall because of midterms. I tend to believe that. Yeah, at least. But, the hard thing is going to be is government's going to have to say, listen, we're just not going to do it anymore. We're just going to have to let people suffer. I say that way, but because that's what they're trying to say, by not, continuing to extend the moratorium, people are going to suffer trying to pay it back, their stuff. So, but yeah, they're going to have to. It is what it is, right? So that's kind of, kind of where we're at with things on there. So what does this mean for Bitcoin? Well, again, Bitcoin is a totally new, it's still a new kind of thing. People still think, that they're going to make a lot of money with it. So, it doesn't correlate. It's not that Bitcoin follows the stock market. That's not the way it is. They both move according to the market's perception of risk, which often we can see in the dollar, but they're not going to be the same, right? Because the Bitcoin market, the crypto market, is something much newer and with a lot greater potential gains than the legacy market. So, something I had talked about previously was once the stock market tops out, we can probably see money flowing into crypto even more, and then it tops out, and then, everything kind of pulls back potentially with that. Okay. Let me see here. But yeah, so I mean, that's kind of where, that's a lot of different talking points, guys. And, if you want to learn more about this stuff, just come on over here and sign up for, I've got a macro newsletter that I usually put out. I've been off for a few months here, revamping it, redoing it, taking in some suggestions from you guys. But you can come right in here and do it. Right here, it's called the Market Breakdown. And I think we're probably releasing that this week coming up. We'll release it again. Relaunch it is what I'm trying to say. And so in there, I kind of go into deeper explanations about things. In the past, you can read past articles where I've talked about what's going on with the banks, what's going on with repo markets, and what it actually means. What is it? What does it mean? How does it all come together and all those things? So yeah, you can do that with that right there. It's free. So if you're really interested in trying to understand more than the sound bites that, Jeff and Sue and whoever on crypto Twitter want to give you, if you want a real understanding of how these things work and how they what they may mean, that's one of the great places to do it. I think I go through a lot of work trying to explain things in a way that makes sense for you guys with that. Yeah, it's funny. What's going on, Michael? He says, Bitcoin's now accepted at McDonald's, Walmart, Starbucks, and Chipotle through the Lightning Network. But man, I don't want to spend my Bitcoin, right? I don't normally go out there and spend Bitcoin to buy things. For me, it's, investment or trading for, greater profits. So I don't, it's kind of interesting that they're accepting it, because I don't know who all's really paying with it. Maybe, maybe in areas like, Costa Rica, that was, accepting it as legal tender or whatever, or at least as money there. And then Honduras, I think recently legalized it there or something, or using it, accepts it for payments or whatever there. At the end of the day, guys, I know everybody wants to get really excited about this. At the end of the day, it's a very small, minuscule. They don't really affect Bitcoin overall, I don't believe, because their actual, use of that is so much smaller than Bitcoin itself, how large it is. When you get some larger economy kind of agreeing to it, then I think it means more of something. The smaller economies like that, the emerging economies and stuff like that, they usually do things like this, but it doesn't actually often transfer to the more significant economies in the global world, in the global world order there. So yeah. El Salvador, thank you. Yeah, that's what it was, not Costa Rica. 1 year outlooks in Bitcoin, Ethereum, and stocks. I think stocks are going down. I think we've topped out. So let's go ahead and talk about it. Let's kind of look at some things here. Let's see here. Where am I at? Let's see here. So we can talk about the dollar first of all. And so here's the dollar. If you guys were with me, January of last year at least, I gave you all the reasons why this was probably a bottom here, and how we were looking at 100 plus coming in. And so we finally hit that today. We broke into 100 today. As far as this goes, let me see. This is a larger time frame. Let me kind of zoom in a little bit more here. There we go. So we kind of had this flat correction coming out, which looks like a 4. And it looks like we got 5 of 5 up here at around 100.5. So as you can see here, we've got the 4-hour Stochastic RSI almost dipping back down into oversold. So the idea being that we'll pull, in this area here and then continue up. Initial target of 100.5. Secondary target up here of 101.188. But I think, again, I think that's the bottom there. I think we continue going up higher. So when we finally reach that first wave being done and pull back, again, we're going to look for that higher up there. But what does that mean? Well, again, the stock market doesn't go down because the dollar went up. The stock market goes down because people perceive it as becoming more risky, right? So it becomes more of a risk-off environment. The dollar just tends to show you where risk is at, what people in general believe risk to be. Because as the dollar rises, one of the things that they use for that is usually risk, right? So when things become risky, people flood to the dollar. Again, part of that is the reason that because it's the global reserve currency, and I don't think many of y'all really understand what that truly means. Basically, long story short, it greases the wheels of finance. It makes it easy to trade between, two different countries or two different currencies to do all that. That's why, okay? But the other thing being that, owing debt. So much of the world's debt is actually denominated in dollars, which means you have to pay it in dollars. And so as the dollar rises, that debt becomes more expensive to pay. This is what I was talking about earlier with, companies, but the same thing with countries, right? And so that, encourages those that owe that debt to get more dollars, right? To exchange whatever the currency is for dollars. So they have the cheaper dollars to pay back that debt. Because the more money due to the rising value of that dollar, the more money that you end up having to pay of your own currency to get dollars to pay that debt, the less money that you have to do the things that you want to do, right, in your country or in your company. So it becomes self-fulfilling. As the dollar rises, encourages more people to buy dollars because, again, owing debt and whatnot on that. So there's just a couple of ideas, why that's going to rise. But also, again, the fact that the Fed is very, very hawkish right now. They're talking about potentially 50 basis point hikes. They haven't done that. Again, they have not done that since right before the dot-com crash back in 2000, right? 20 somewhat years. They haven't done. They've done quarter point. They're talking about unwinding their books, quantitative tightening, right? All these things boost the value of the dollar. It makes the dollar better to hold. You can loan it out for higher interest rates. So when you compare that against other currencies like the euro, again, everybody was, rah, euro, but Lagarde and them over there had just been like, yeah, no, we're going to keep holding off. We want to make sure the economy's doing well enough before we actually start doing these things really that the Fed's doing. And so, the USD euro makes up almost 60% of the weighted value of the DXY. So as long as the euro continues to not be as hawkish and the USD continues to be hawkish, generally expected to go up. Japan's done some things lately that have caused it to lose ground against pretty much everything out there. The USD yen makes up about 11-12% of the weighted value of the DXY. So between those two things, you're already talking over 70% of this value is already in, whether, based on whether Euro USD is rising or falling or the USD yen is rising or falling. And since the Euro USD continues to fall and the USD yen continues to rise, that makes the DXY really bullish. And then you've got all the other ones, the Euro Swissy, the Euro Cable, or Cable Euro, the USD Loonie. And of course, oil topping out and coming down means the Loonie's going to lose value. In addition to the USD rising in value, that makes it a great potential positive trade, right? Long. So, all this kind of plays in this way, but you shouldn't look at Bitcoin as necessarily being directly correlated with what's going on with the stock market or whatever. It doesn't make a whole lot of sense. They both move in relation to their specific market's risk on or risk off attitude. And because Bitcoin and cryptos are newer, still a lot of money to potentially be made and whatever, money is going to rotate potentially into it, which is what we're seeing right now. I did post that other article. Let me see right here. This one right here from Bitcoin Agile here. Assets under management surge in crypto venture capital firms. Basically, especially the Web3 and stuff like that. So, money is flowing in here because this is where you can make money, right? You can make it pretty well. So I think that it gives the whole cryptocurrency market the potential to extend longer, even though the stocks may be coming down, right? When I say higher, do I mean over the next couple of months, years, or decades? Do I think 140 is possible? I think it's possible, but we need to see once we get the bigger correction in here and then the breakout above that high that's been developing here. I think that'll put us in a much better position to understand just how high it may go. But yeah, I don't think it's entirely out of the question. And, again, that just kind of is a product of how, what's going on here versus what's going on around the world. But, we have to see what goes on here. Because remember, the Fed is reactionary. Everybody says, oh, the Fed does this, or that. Fed doesn't do squat, guys. They're reactionary. In case you haven't figured out, right? Took them a while to get in here and start raising things after inflation was flying up, right? They're just reactionary, guys. So the Fed itself doesn't make things happen. The Fed's always a step behind. So it really kind of depends on what goes on with the economy and how things go. And, then we'll see how the Fed kind of reacts to that. But we'll see. We'll see how far that ends up going. Possible, right? We talk about globalization. I think, especially if we're at this point where I think we are, where we're looking at this really more of a depression than a recession coming in. I think, again, that affects countries around the world. And I think deglobalization happens for a bit. Again, we talk about extremes, right? If anything, the markets are all about extremes, extreme highs, extreme lows. And we are right now really at kind of this extreme for globalization. So I think there's a lot to be said for that. The DXY, you can get volume on the DXY. What you do is you just have to go to the dollar futures, which is on the ICE exchange. It's the only place you can trade dollar futures that I can think of right off the top of head right here. But here is my Wyckoff for it. And so this is what I've had here over, since last month anyway. Again, price action volume suggesting this was accumulation. You just move back up. And it looks like, it looks good. It looks like what we would generally expect. But because it is the futures there, you can get your volume on that. Sure. No, I haven't been in touch with Scott yet on the next stream. He's over in Miami this week doing that Bitcoin thing over there. So I'm not, in a hurry to bother him while he's doing all that, doing a lot of interviews and stuff like that. But yeah, we'll definitely be talking when he gets done with that. We'll see how things are. I think, we had a good time. I think we both kind of want to do something more consistently, maybe weekly. But we both stay pretty busy, especially him with the interviews and podcast and everything else he does. But if we can figure out some time that we can come together weekly, I'm pretty sure we'll be doing that. Once we get a top a few years, maybe you're talking about for the dollar. Do you think that the last top for the dollar ever? Oh, I don't know about that. I can't even answer that. Because a lot of it's going to be, what happens? Do we actually get this kind of depression that I'm thinking about? And if in that, is it because we hit deflation or do we hit stagflation with it? And, those two things are going to have different outcomes on it, as far as those much longer term charts and ideas going on. So I really don't have a good idea about that at the moment. So yeah. James, what's up? He says, if we are in a risk-off environment, what's the real argument for crypto to rally? Well, just finishing out the current bull market. Just finishing it out. Again, coming in a little bit later than the legacy, because again, the money making that rotation from legacy into potentially into the stocks here. Into crypto here. But equity bulls, man, they keep trying. They keep buying those dips, and then it keeps going lower. And I'm not sure how much it's going to take to break their back, to get them to finally go, oh my gosh, I guess I'm wasting a lot of money here. I think your oil guys in general understand that. So let's kind of look at oil here real quick. Oil, looks like it's topped out here. Let me see. Prior to the all-time high that we saw back in, there we go, that we saw back there on July 11, 2008, that almost $150 a barrel. We've topped out so far right here around 130. Now, we are still going sideways here. We haven't actually broken down. Well, yeah, we actually have broken down below wave 1 here. Because remember, we were talking about the fact that this looks like a truncated fifth here. And so, we've dipped down just below it here. So the idea is either we're at a 1, 2, and we've got 3 coming down here to 86.22, or we've got 1, 2, 3, 4, 5, and then we're potentially coming up at least the 50% level for wave 2 here at 99.53. It could go up to the 78.6 at 102.95. But overall, still expecting it to then continue lower there. Again, we're still sitting under 100 here, almost reached 93.81 there. Almost reached $90 going down there. But again, when we talk about inflation, the two biggest contributors to CPI, which is what we use to measure inflation, are oil and housing. And oil appears to be topped out. Housing appears to be topping out. So, again, I've talked a lot about extremes today. And at the extremes, people think that whatever's going can't stop, right? There's going to continue on, significantly. We've got calls for $300 a barrel oil. I don't think we're at that. Remember, guys, we've been moving up for almost 2 years now from that negative $42 May contracts of 2020 with oil. It's got to pull back. It's not going to continue rallying up forever. The idea that it goes to 300 from here after being that low, I think is just a lot of wishful thinking. And so also, when it comes to oil, again, less production by the companies means less need for oil. Remember, oil is found in pretty much everything, especially plastics. Less production also means less transportation. Less oil. People losing their jobs, stuff like that, means less flying. Companies having to tighten their belts means less business flying, right? And then, of course, people less money to go on cruises and things like that. Cruise ships and airlines, two of the biggest, oil takers out there. So, a lot of things potentially setting up to kind of set things to continue coming lower here. Okay? Any alts that you love or hate? I love and hate all of them. Personally, I tend to stick with the larger, more liquid alts. Ethereum, Litecoin, XRP if you can get it, Tezos, things like that. I don't really venture into the very low end usually. If I do, it's just a moonshot idea, and I just pop a couple of bucks into it basically, for me. And then, if it does happen to get some stupid crazy rally, hey, there we go. But, I don't expect it to, so if I lose money, it's just a very tiny bit that you lose on there. But as far as my investments in trading go, usually stick with the much more liquid, much more major alts. Yeah. Let me see here. Do I put any stocks in WF and the Great Reset? Sure, to some extent. I think a lot of people have a lot of ideas of what's going to happen, and I think what may actually happen is probably going to be, a product of some of that this way and some of it that way, So it won't be anybody exactly, but it'll be bits and pieces of things, I think, maybe. Kind of do that. Let me see here. Just kind of see if I can catch up with you guys there. Okay, so let's look at the stock market here real quick, guys. So I kind of made mention of that. And so this is NASDAQ Composite. Trying to find some support around wave 4 here. Wave 4 up here, finding resistance. Wave 4 down here, finding support. I think it's possible we got a 1, 2, 3, 4, 5, and then A, B, C. So wave 2 may be complete. The other possibility is maybe we've got 5 down here, and then this becomes A, B, and 2 up. And in that case, I would expect it to fill in the gap here and then come down. But as long as we break down below this swing low right here, We should be looking for a wave 3 minimum expected target down there at around 12,781. But again, top way over here potentially up in November of last year. So going sideways here, looking for some breakdown to kind of take it down and continue lower on that. The S&P, we can look at the E-minis here. Again, same kind of idea. Top back in, except top back in January over here because it's not as tech heavy, though it's still pretty tech heavy. Locally here, maybe a wave 2 being done. Could potentially head up higher toward the pivot here. But a breakdown below that 44 and 50 cents should get us a minimum wave 3 down here at around 42.83 and 25 cents. And then, of course, going on to the Dow Jones, which is much more broad-based, not so tech-heavy like the NASDAQ and the S&P. A little bit different. Again, top up here around the same time as the S&P, beginning of January, their first weekend. Locally here, looks like I was looking at potentially a 1, 2, 3, 4, 5, and then A, B, C. Could still be, or maybe even 1, 2, 3, A, B, C is 4, 5, and then A, B, C here for 2. I think that might be what it's doing here. That gets us down here, wave 3, around the 32,941, 945 kind of area. Breaking down below this wave B triangle support at 33,245 and 14 cents. That's going to add confidence to the count and suggest that wave, 1, 2, wave 3 is in progress, much lower. Again, with all of those, just breaking out above that nearby wave 2 will change potentially. Well, it's going to change the count. It's going to invalidate the local count. But, we'll see how far it continues to go up there. Do I really think a big crash on stocks before the midterms? Yes. I think they're already, coming down. I think it's very possible. There's absolutely nothing happening right now that suggests it's not. Everything is actually kind of looking the other way, that like it will. So it's hard for most people to believe. But everybody's got their narratives based on, usually the old narratives, the way that people seem to look at the markets. They believe that the market moves because of news events and whatnot. And of course, if you guys have been following me, you know that I believe that the market's based on, it moves based on social mood. So social mood happens, the market prints here, and then sometimes somebody will attribute some news event to movement, but news event movement takes place all the time, right? And so, they just kind of, associate it with it at certain points. But my idea, the way I believe it is that it already happens, and sometimes, you'll get a knee-jerk reaction based on a news event, but that's all it is. It doesn't change the actual trend of what's going on. Yeah. Any guess on how far this smaller time frame pullback on Bitcoin will be? Oh, I don't know about smaller time. I haven't even been looking at it. What do we got going on here? So potentially 1, 2, 3, 4, 5, 3, 4, 5. Maybe it's 1, 2, 3, 4, 5, and then B. So you could have an A, a B, and a C here. We're just about hitting that kind of 78.6 area. So, if it's going to reverse, potentially from there, but, we'll see. Let me kind of pull this over here a little bit so you kind of see where we're at. And that'll just change things. Again, that would be right there. It's the other possibility here, guys. Don't forget the other possibilities. We got 1, 2, 3, 4, 5. So A, B, C. Just as a correction here. And so it's possible that maybe wave 4 ended here, and then this is 1, and this is a really deep 2. And then we've got 3, 4, 5 still coming in. As far as how far it goes, again, it just really depends. There's so much overlap there that it's really hard to kind of figure out what may be going on. But I've got an initial target range here of basically $42,040 to $42,477.5. And we'll kind of see from there. See how that works from there. 15-minute is almost resetting down here. Again, this looks like accumulation here, so we would need to really see this kind of rally on up to say it is. But that's why we always have those validations. We're always looking for the breakout. We're always looking for our jump across the creek kind of thing, which we don't have yet. To kind of continue it up there. 1 hour, we're up here and overbought, could come down lower there. So, this range is right here around the S2 pivot on the 1 hour. If we come out here to the 4 hour, 4 hours kind of high here. So again, could come down further there. We'll have to see how it plays out. It's just sideways, guys. It's really too hard to kind of figure out what may be going on there. It's kind of a fool's errand. Like we said, we were looking, I had the little small try there, but the stop loss was right there just in case, right? Because it was still likely that it could do something like this. So yeah. My settings over here, VPVR, 15 or 17% width of the body, and then 384 is my row size. That's the only thing I change on it, except I remove the point of control usually. Again, daily is daily, So as far as a daily time frame goes, I could see a move down toward the S1 pivot. But again, that's the very large high volume node here. I kind of get back over here. So, it's right there and then up here where we kind of found, resistance. So I could potentially see it going down there, which is just this area of support or resistance. Kind of like this area is right here where we're at. A little bit lower there. So that would make the most likely kind of place. And I think if it was to get down there, the RSI would reset as well, along with that Stochh RSI. The big issue, really, when you're looking at it from this longer time frame, is that, yesterday we didn't close back up above it. We kind of got rejected at it. So again, that sets up the possibility we could head lower there, which means we just have to kind of figure out what the count may be going on there. But first, we're going to have to see if we, first of all, does it break down? If it does, do we get a rally up from this kind of, round number 42,000 is a little bit below that S2 pivot, again, toward that kind of orange range here I'm looking at. Do we get a rally back up and out of that? If it does break down, I guess it's possible we got a 1, 2, 3, 4, 5, so an ABC. So we could potentially see an ending diagonal here. 1, 2, 3, 4, 5 coming in there. And then if we see that, you're going to expect to see a nice, strong, big candle coming up out of that when it's done. But again, 1, 2, 3, 4, potentially 5 on that. Let me see here. Let me make sure wave 3 isn't the smallest. That's going to drop below. Yeah, that won't work. But it could be A, B, and then 1, 2, 3, 4, 5 here. So, it looks like we've got 1, 2, 3, 4, 5, 6, 7 swings here, which is corrective. So, again, the idea being that maybe that could be a 1 as a part of a leading diagonal, and then 2 up. And then you'll have an ABC down for 3, back up for 4, and then an ABC down for 5. And just in this overlapping kind of thing. And then you'll see something nice like this, breaking out through that when it's done. I think that's what we're looking at right now. If we break down. Right now we're trying to grab some bounce there off that. So yeah. If you're looking at the daily, I don't worry about breaking things on the daily. I worry about where they close on the daily. Yeah, the daily I don't really care too much about what it breaks or whatever. I'm more interested in where it closes because it's such a large time frame. So yeah. Let me see here. Let's see. We talked about oil, stocks, Bitcoin, dollar, macro stuff. Here's silver. Silver, I believe, topped out back over here. Actually, let me see. Let me zoom out a bit here. Remember, silver just did all this sideways here since August of 20. It's still sideways on that, right? But right now I'm still looking this as wave B of a flat and wave C to take it below $10. So locally, we're looking to break down further here. See if maybe we have a 1-2, 1-2, or something potentially been there. I look at maybe more upside if we break out above this wave 2 over here at about 25, 285. But until then, here we are, we're just hitting that kind of pivot there on the 1 hour. But those pivots will change when the market opens next week. Gold, of course, kind of the same idea. So gold is broken out above wave 2 here, which suggests that right now we're kind of hitting this kind of EQ up here. And so possibly this could be 1 and then A, B, 1, 2, 3, 4, 5 is C. So it is possible it could be a large flat correction for a wave 2 here. But we're going to need to see this breakdown below 1917 to suggest that wave 3 is in progress. If it does break out above wave 2 here, well then we're just going to kind of look at this and go, okay, well maybe maybe wave 2 might still be in progress. This might be an ABC up and an ABC down, and then 1, 2, 3, 4, 5 heading up a bit higher. But nothing in there screaming that, that some kind of bottom's in and we're going to new all-time highs or anything. Yeah. So, just kind of watching it as it plays out there. You got a lot of people trying really hard and the market keeps rejecting them. We'll see if they can follow through on all that. But things look like what they look like right now. And so we'll continue to see how they play out. I'm still short my Euro USD. I'm still short from 1.10967. So right now I'm sitting at about 223 pips of profit. It was down earlier today, I think around 255 pips earlier. We get a little bounce locally, but I think overall we still got lower to go on that. And of course, that's a lot as I expect the dollar to continue rising. Of course, the Euro USD should continue to pull back. So, I think it's kind of where we're at with everything, Don't try to get too caught up in what crypto Twitter says. If anybody talks about news events, try not to listen to that a whole lot because there really isn't a whole lot good that you can get out of it other than, usually knee-jerk reactions. But people generally expect, most people view the market as things happen in the market and then that causes people to do things. And it's actually the other way around. Again, it's a social mood. What's going on out there shows itself in the market on the charts. And then that's what happens, right? Other than your small knee-jerk reaction stuff. And think about it. It makes more sense, right? You're gonna buy into the market if you're feeling good, right? If you feel like I can make money, if you feel like it's going to do well, you're going to buy into it, right? It's not that it does something and then for the most part that you buy into it, right? And again, we're not talking about individuals, guys. We're talking about the market as a whole, which is really kind of dominated by the big players. So yeah. When an engulfing candle prints on low volume, is that usually an indication of a reversal? I don't think it really matters whether it's engulfing candle or not. An engulfing candle itself says pause, potential reversal. You need to have follow through with your next few candles to kind of confirm it. I know a lot of people try to sell you on the fact that engulfing candle is definitely a reversal. But as I've shown you guys, Blaze, over there in Discord for tier 3 there, it doesn't always happen that way, right? Yeah, so I think the best way to think of engulfing candles is that they are pauses, potential reversals. Now, the volume itself has to do with where you are within the structure. So again, if you're in a structure where every time you're dipping lower, it's on lower volume, well, that's usually a good sign that price is going to rally back up. It doesn't guarantee it, but usually it's a big predictor that it's going to continue up. Or if you see heavy volume coming in at the tops, it's usually a good predictor that price is going to go down. because what you have is a lot of selling at the top going in. Remember, your volume, guys, really, for all intents and purposes, your volume is the product of selling, right? Because if you don't have selling going on, it takes very little buying to send price up, right? So the more selling you have coming in, the more buying you need for price to rally. So when you think of volume as a product, as really your selling. So if you've got heavy selling at the top, that's your big players coming in, right? And if you've got heavy volume at the bottom, it means there's a lot of selling coming in, but price isn't going anywhere, right? So you've got your big boys soaking up all that selling going in there. And that's why you get all that big volume down there at the bottom. Volume price action is such a nuanced thing, and it often takes people a bit to really kind of figure it out. But yeah, that's kind of what we look at as far as that goes. So, just some things to watch there with it. But yeah, zooming out here to the 15-minute, that looks like an ABC up. And this looks like 1, 2, 3, 4, 5, 6, 7 swings down, which would be corrective. So if this is corrective and this is corrective, then, generally especially with the idea that this is 4, with this A, B as a triangle, and C as 1, 2, 3, 4, 5. That would suggest that we're probably going to get an ending diagonal here. So 1, 2, 3 breaks down just a bit below, 4 up, 5 is even shorter than 3, and then that completes that wedge. And the breakout of that wedge should be on good volume, good, large candle spread coming out of there. So that's what we're looking for right now. But it's got to drop down below the swing low here. As long as it remains above this, prices still potentially could go up higher. Once it breaks down below there, I think that kind of cements it in as being done with 4 here. And then this is 1, 2 of a flat. Of a ending diagonal. 1, 2, 3, 4, 5. So that's what I'm going to look for. So anyway, there it is, guys. It is 12:30, so I need to get out of here. I hope, even if you don't follow, believe in what I'm saying and things I say. I realize that can be hard, especially if you're, new to trading and whatnot. I hope that at least it has you thinking. That's the goal here, guys. I'm not here to convince you that price is going to do one thing or other. I'm here to tell you, listen, this is what I'm looking at the charts. This is what I'm expecting and why. Here are the validation and invalidation levels. And, and then I go into explanation about how I'm looking at it and why, so that way you understand. It's not there to convince you that I'm right or to convince you that you're wrong, but hopefully it at least makes you think. There's too much of lack of thinking going on with traders, social media right now. And they end up losing a lot of money because they don't, they're not thinking. They're just kind of doing the whole, what's it called? Sound bites and whatnot, and just living off that, not really understanding what they're saying. You see it rampant with the idea of hyperinflation and all that other silliness right now. So there you go, guys. Okay. So, hey, listen, I appreciate you guys. You have a great weekend, and I will look forward to seeing y'all on Tuesday, 11 a.m. Central Standard Time. If you'd like to, learn a lot more, get a lot deeper, a lot faster, you can join us there at TexasWestCapital.com. Just click on that green button right there, or you can go to howtotradetowin.com, which is where that button will take you, and then you can sign up for, tier 1, 2, or 3. Like I said, tier 3 is the one that just gives you everything, all the education we do. And with that, I say that if you're going to do that, I'll be honest with you guys, don't go in half-assed with it. If you're, only do it if you're serious, especially if you only plan to do it for a month or two, because there's so much information you have to be serious about to go through all that education we have. Well over 200 hours already archived in there, and 3 hours at least a week coming in new. But there's a lot of stuff there that can help you navigate all the nonsense that goes on. You have access to all this information online, but so much of it is either half truths or outright lies. And so at least, even a month with us, at least get your head in the right place and understanding a lot more, so that when you start looking at that free information or that somewhat free information, you can make better decisions about what's more likely correct than not. Okay? All right, guys, as always, remember the only thing you control in the market is how much you lose. There are no guarantees in your trading. So risk management is where it's at. It's the most important thing you're going to do day in and day out as a trader, all right? If you are not already taking it seriously, jump on it. Get to taking it serious. All right? We'll see Discord there in a bit today. And then for those of y'all that aren't in Discord or choose not to join, of course, I'll be back on Tuesday, 11 a.m. Central Standard Time, all right? Take care.